All right, Clay, so we effectively got an increase in oil output, by all accounts, somewhere between 600,000 and 1 million barrels per day. Why is oil higher?
Well, let's talk about what they decided here. It seems like they decided to go back to what they had already agreed to, which would amount to an increase of about a little less than 1 million barrels a day. The problem, though, Brian, is that not all the member countries can step up their production. So in a situation like this, the countries that have spare production capacity, Saudi Arabia, United Arab Emirates, have the opportunity to gain some market share. Those guys that have reduced capacity to produce, Iran, Venezuela, are at risk of losing market share now.
The market's obviously disappointed, though, Clay.
You know, when you look at the market, traders are smart. They're not only looking at a production increase, they're looking at a reduction in spare capacity. As production goes up, that cushion, that insurance of spare capacity against future supply disruptions shrinks. You carry a spare tire in your trunk, right?
Yep.
I've never seen anyone who carries two. So once you strap that on and keep driving, be careful.
Are you surprised by today's decision?
Not at all. I mean, it was clear going into the meeting that there was some disunity in the group. It would be hard for each one of the member countries to come up with an assignment. So this is the compromise they've come up with.
And I think you cannot overstate the fact that there are 240 members of the media in that room, more than a presidential press conference in the United States. Oil is global. And there's so many hotspots being reflected now. Iran, Russia, Saudi Arabia, the Venezuelan disaster, the U.S. oil boom, all reflected under the sheen of oil. What do you think are some of the big storylines besides the number of barrels being added per day that we need to talk about?
Yeah, in the background of this one, there are a lot of kind of elephants in the room. You've got sanctions maybe looming, coming back on Iran in August. You've got actual oil infrastructure being sabotaged and destroyed in Libya. And but let's not forget about the elephant that's not in the room at OPEC, which is the United States E&P industry. They've gotten leaner, they're very efficient, they did very well in a low price environment, and I think OPEC learned a lesson from that.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.